Good morning and welcome back to Morning Markets from True Potential. Paul Durrant, Investment Director. Today we start by looking at the US markets. We heard from Jeff yesterday who talked about the strength of US equity markets on Wednesday. Yesterday was more muted for returns, although there was some positive returns from the Nasdaq, which is more of a tech focused index. In Europe, we saw positive returns as well. However, we also saw negative returns for UK stocks. Bonds rallied, and we also saw strength in the pound, up 15% since its lows, which was in September, and we saw weakness in the US dollar. And that was really following Jay Powell's comments, the chair of the Federal Reserve, the US Central Bank, on Wednesday, who guided the market that the pace of future increases in interest rates would be smaller than the current level of 0.75%. In terms of his comments on Wednesday, he also talked about the inflation backdrop and how not to place too much emphasis on the data that came out at the beginning of November, which was on the CPI inflation numbers, looking at the core CPI, which fell from 6.6% to 6.3%, a real positive, and it was a real positive for stock market returns and bond market returns. He guided that the more important measure for the US Central Bank is what is known as the Personal Consumption Expenditure Index, another inflation reading, but it's more pertinent to the Federal Reserve, and it's one that they actually provide forecasts on. Coincidentally, with their timing, yesterday we had the data from the US on this measure. Stripping out the more volatile components of energy and food, core PCE, the inflation reading, actually came in better than expected, coming in at 0.2% over the month, whereas the consensus was 0.3%, and on a year-by-year basis, falling from 5.2% to 5%. So a real positive for the markets again, showing that another indicator shows inflation is falling from very high levels and going to a more sustainable level with the target of achieving 2%, which is what the Federal Reserve is mandated to achieve. Elsewhere, in terms of economic data, we had the US ISM manufacturing survey data. This is closely followed by investors as it gives you a timely, up-to-date reading on the US manufacturing sector, which is a big part of the US economy. We can look at the individual components such as new orders, employment, and prices. What we saw yesterday was, from the latest reading, was the manufacturing sector has gone from expansion to contraction over the month. However, when we look at the individual components, the prices actually continue to cool, now at its lowest level since 2020, and this builds into the inflation picture and the narrative that inflation is trending lower towards that 2% target. Elsewhere, we had consumer spending numbers, which continue to grow from 0.6% to 0.8%, and that's been helped by increases in income levels over the month. And that should continue and support economic activity going forward. In terms of other data that we're looking out for today, a really important day for the US, we get what is called the non-farm payrolls, and this is really a measure to see how many jobs are being added to the US economy. 200,000 jobs are expected to be added. That would be down from the previous month of 261,000. But adding more jobs to the economy is a good thing for economic growth, but it also pushes up wages because a lack of supply and an increase of demand. We saw on Wednesday the job openings at 10.3 million, so a lot of jobs available and not enough workers. So that pushes up wages, and that feeds into the inflation pressures. We'll also get wage data today, 4.6% year on year expected. So any reading that we see that's below this, and if there's less jobs added, we'd actually see that as a positive for financial assets, given what that will mean for interest rates. That's everything from us today. Thank you for listening, and we'll see you next week.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.